This roadshow is brought.
Once we started the call, right? Yeah, connecting. The conference is now being recorded. Ladies and gentlemen, good day and welcome to the VA Tech Wabag Limited Investors and Analyst Meet 2015. You're connected to this meet through this conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rajiv Mittal, Managing Director. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and welcome to the Investor and Analyst Meet of Viatech Wabag. To give you a brief background of the company, Viatech Wabag is a leading Indian MNC specialized in water and wastewater management. Wabag is a 9-decade-old brand, and around the world, Wabag stands for innovative and successful solutions in the water engineering sector. As an internationally respected expert group, Wabag acts as a systems specialist and full-service provider with a focus on engineering, installation, and operation of drinking and wastewater plants for municipalities and industry in the growth markets of Asia, North Africa, Middle East, Southeast Asia, Central and Eastern European states. The company came with an initial public offer in October 2010. The last time we had an investor and analyst meet was in Feb 2014. And since then, the stock price has outperformed the benchmark indices significantly. As an investor relations advisor, we have been working with Wabag for the past 4 years, and we are very proud to be associated with the company in the growth story. On the dais, we have Mr. Rajiv Mittal, Managing Director, Mr. S. Vardarajan, Executive Director Finance, and Mr. Bernard Bureau, Head of the European Cluster. We will start with a presentation by Mr. Mittal on the business update, his view on the water market scenario, and the financial performance of the company in the last financial year. This will be followed by a Q&A session, so I request you all to keep your questions at the end of the presentation. We also have participants joining the meet through a conference call. Thank you so much. Over to you, Mr. Mittal.
Thank you. Good afternoon, ladies and gentlemen, and friends who are joining us on a conference call. First of all, let me thank you who have taken a time out and have come here to be physically present in this investors and analyst meet. We are really proud of our investors who have supported us since our IPO more than 4.5 years back. With their support and guidance, we have been growing steadily and we have been able to give returns to meet the expectation of our investors. Let me start very brief presentation to tell you what we are doing, how the year which has gone by, how we have performed, what are our future focus areas, and how we want to add value to the company to make sure that your investments have a good return. Let me start with the first slide. These are some of our projects which you see we have done at Turkey. And just for those of you who do not know the company well, to say that we are one of the very few global pure play water companies with a complete capability in total water management, be it clean water, which is drinking water, wastewater, including desalination, and we have a brand which is valued globally and has a 90-year plus history. We are not an ordinary general contractors. We are a technology company, and we spend a lot of time on developing technologies so that we can be ahead of our competition. This is one of the differential which we have with our competitors, where we bring in technologies which are differentiating technologies. We have more than 100 patents, 3 R&D centers. The largest one is in Switzerland near Zurich. The next one is in Vienna, Austria, and the last one in India, in Chennai, where we do a joint research with Anna University. We have a strong execution track record. More than 2,300 projects we have completed in last decades, both for municipal clients as well as industrial clients. I think one thing which even before our IPO, we have given a lot of emphasis and taken care that we are very high on corporate governance. So this part is demonstrated very clearly. Today, our board consists of 4 independent directors and just myself on the board as an executive director. So these are some of our values which we have to bring independence into it, improve the openness, transparency, and continue our conservative policies of running the business. This is a professionally managed company. All the promoters and the top management are professionals. Nobody is from any of the family members of the promoters, and this also brings strength to the organization. Another very important thing, a lot of companies you must be following, you must be investing, which clearly says that they focus only on EPCs because they are driven by numbers, and that also the top numbers. We are that way little unique. Right from day one, we have been telling you, we are in a journey where we want to sustain for a longer period of time. So not only the top line, equally important or more important is bottom line for us. And the mantra we have within our group is profitable growth. Yes, we want to grow. You have seen since the start of IPO, we have been growing, but we want to grow profitably. We don't want to grow at the cost of the margins. We also do business in the service, which is the operations business. Almost 20% of our business comes from operation, which you know has a much better margins compared to the EPC business. And also we avoid investing money into asset. We want to remain asset light. These are some of the sample of how we value technologies, and hence you will see all the advanced technologies available globally is available with your company, And here, we, the VA Tech Wabag, value this, continue to invest money in technology development, and as a result, we bring in advanced European technologies to the emerging world at the local pricing. And that's something which adds value. This brings us success without compromising the margins. You see the one latest example here on the slide, you see Nerida. You must have read about 6-7 months back, we have signed a technology agreement with one of the large European player, DHB, where we have licensed their technology. This is just mentioned to prove a point. We are open for technologies. Either we develop in-house, we buy the technology, or we license the technology, but we always want to be ahead of competition in terms of technology. Other big focus area for us has been desalination, because we strongly believe desalination is future. Our fresh water is very limited, and over a period of time it is becoming less and less because a lot of these freshwater sources are getting polluted. We have to look for alternate source of water. Desalination is one which provides an alternate source of water, and it's also perennial. Seawater is never going to dry up. So, especially for coastal towns and cities, we strongly advocate for desalination, and Chennai has been really a forefront runner in this initiative. You have seen here that we started small from a plant in Dukkum in Oman. We went on to do another project in Oman. We have done projects in Saudi Arabia, and then we took the mega project of 100 MLD in 2010. Successfully completed. Lot of people had apprehension about our ability to construct such a large project, mega project, desalination, which we have not done before. But today, this is all behind us, successfully executed. This plant has been running for 2 years. City of Chennai is today surviving on this water because last 2-3 years the rainfall in Chennai has been bad. The desalination has come in very handy for the government to meet the potable water requirement. We have not stopped there. We have gone ahead and built a 200 MLD, to be precise 191 MLD desalination plant in Oman, Al Ghubra. This is to show that we are definitely on a journey where we want to be a mega player into desalination. And this, you see, we get a global recognition from global water intelligence, where they say that already Wabag is in top 10 desalination companies globally. And this is what we want to achieve. Whenever there is a desalination plant globally, Wabag's name figures in that. To see this plant, our board was also visiting last month, and you see the board there. The plant is complete. It's ready to start next month. You will see that we'll start producing water from next month onwards. The other thing we want to remind you, in 2010, when there was Arab Spring, we had some projects in Libya and other countries like Tunisia and Egypt. There was a lot of worry, not only with you as investors, but we as management, that a portion of our market is going to disappear, if not permanently, at least for a short period of time. But we did sit back and said, that's God's wish. what do we do next? Our thinking cap was on, and we said, we have a resource. Very difficult to get experts in water. We can't let them go home. We have to use them somewhere else. And that's the story of our new MDOs, Turkey and Philippines, which came to life around that same time so that we can shift some resources into that market and start new geographies. First, let's talk about the Turkish success story. This thing was started in 2010, almost the same time when some of the other markets were disappearing because of civil war. And in 4 years' time, we are already a market leader. You can see some of the projects in red. These are operation and maintenance projects. These operation and maintenance projects not only bring visibility to our revenues, but also build a long-term relationship with our customers. Somebody can arrange some chair for this. So I think these are the revenues which comes in regularly, month on month. It's an annuity model. Cash flow wise, fantastic. Risk wise, very low compared to the EPC, and margins are always good. And this is what you see in a new geography where we go. We don't just jump into EPC, we also focus on O&M. Just look at the bigger left hand side top circle. It's Istanbul. Istanbul is a mega city, it's not a capital, but it's a business capital of Turkey. And you see the total city's wastewater management, including conveyance, pumping, treatment, disposal, is managed by Wabag. The complete city's operation is managed by Wabag. We have almost 1,000 people from our company working for Istanbul Municipal Corporation, ISKI they call it, and we have been running this plant since August. This is a 2-year contract, more than 50 million euro, so almost the billing every month is about 2 million euro in O&M. This is fantastic. In addition to that, you also see that we have not stopped taking EPC projects. Can I talk to you? EPC projects, there are 3. We have EPC projects also, which we are executing, and this has been a real success story. Now, if you look at Philippines, the other subsidiary we created to use the capacities and capabilities were released from the other market. You see that. You see that this also, fantastic. We just have concentrated on Manila. Why Manila? You know, Manila was one of these Asian cities where water was privatized. There are 2 private operators which are working. Manila Water, you all must have heard, and Many Land Water. So all these 8 projects you see are with 2 customers because majority of the population in in Philippines lives in Manila. Quality of the projects are very good, and some of these projects are also funded by World Bank. So they have been good waymasters, very advanced technologies. One of the technologies you see, left hand side bottom, is Swiss. That's where it shows how we integrate the whole group as one team. If the technology is available in Switzerland and the market in Philippines need that, they join hands together to bring the first class advanced European technology from Switzerland and build the plant in Philippines. And we remain competitive because the market is in Philippines, the local resources in Philippines, execution will be done in Philippines, so we do not have the high cost of Europe for an emerging country like Philippines, but the technology they get is the most advanced technology. Another important point which you must see why we are competitive. If any other company would have gone out and brought this technology, they would have to pay a technology fee, license fee, royalty. But for us, it is a technology belonging to the group, and this technology is available for every company within the group to use it. And that's a big success for us, and that makes us very competitive, bringing the advanced technology and executing the project at the local cost. I want to emphasize our strategy, what we started the company, we want to continue on it. We want to remain in the developing markets or the emerging markets. We have no aspiration of going into advanced or developed markets except if there are some spot opportunities. These are not our target markets, these are the spot markets in case there is a project in France or Germany or US, we will just go for that project and come out. But our target markets remain the emerging world. You see, it's Asia, which is Indian subcontinent and Southeast Asia, Middle East, Africa, Europe. Again, more focus is on Central and Eastern Europe, and LATAM is a new addition which we are moving into that because we see a huge opportunity again in wastewater treatment, industrial wastewater, as well as desalination. I think this is the other big opportunity in India. We have been waiting because these are some of the present government's flagship projects. We have all heard about Namami Gange, Swachh Bharat, and smart cities. We all know there are 5 states, whether Uttarakhand, UP, Bihar, Jharkhand, and West Bengal. This is where Ganga and its tributaries pass through. We all know industrial wastewater, municipal wastewater is directly let into the Ganges. Now, even sometimes, though it's holy river, if we have to go and take a holy dip, people will tell you, be careful, you should not swallow water, you fall sick. I think this has to change. There have been many opportunities for the government to do that. They have been trying for many years. They want to do that. But this time, I believe there's a serious attempt happening. They're just not jumping into investing money. They are going it systematically in a planned and phased manner. Sometime back, Supreme Court had asked the government, when you're talking about cleaning Ganga, what do you mean? What is it you're going to invest? The government had said 51,000 crores. I'm sure they have a basis for that. But more important, recently, about a couple of weeks back, you all must have heard that government has already allocated 20,000 crores for Namami Gange. Same thing on Swachh Bharat. These are other cities and towns which are not directly on the Ganga and tributaries of Ganga. This is both for solid waste management as well as liquid waste management. We are not into solid waste, but even if you see, half of this 50,000 which was allocated 2 weeks back is for liquid waste management. That's a big opportunity for us of 50,000 crores. Smart cities, another flagship project for the government, of 48,000 crores was allocated for that to develop smart cities. The point we want to emphasize, we all have been talking, sometimes joking, that अच्छे दिन आने वाले हैं. अच्छे दिन, I think it's very close. With all this, it gives us a feeling and makes us bullish that Actually, are not that far. And being a leader in India in this field and completely focused on water sector alone, because we have no other business other than doing water business, I think we can take a big share of this opportunity. I think from your point of view, we think what you look for. We think we are predictable. Our business model sector is sustainable. It's not one-time opportunity. It's a long-term opportunity. Company has demonstrated enough of our proven track record, our promises which are kept. Our business, we have shown you, is very scalable, and we have demonstrated which promise we made. If some of you remember at the IPO time, you said to us, you are giving such numbers that you want to grow in next 5 years, 7 years. How much cash you will need for your growth? How much more money you will borrow or raise from the market? How much you will dilute us? Our one word answer was, for next 5 to 7 years, meet the numbers. We are not going to raise any money. We are not going to dilute you. It's the promise. And that's what we want to tell you and remind you, that our business is scalable. It is not constrained on the funds. We generate funds in our business, and whatever funds we generate is enough for our growth plans. I think we have earned to be called as credible company, and you have seen that all the years we have been where you have invested your money, you have been tracking our company, we have generated profits throughout this, and we have been paying dividend almost 20% of our profits. I think this is something we want to talk to you on our future. As we told you, we are focused in 4 regions: India and Southeast Asia, Middle East, Africa, Europe, and Latin America. We are restructuring or realigning our business to have even greater focus on the market, and also make sure the span of control of our leaders, managers, and technology experts are in a very focused way. They are not widely spread, so that they cannot have a focused approach. They must have a limited focus approach so that their success rates are better. So all this business unit structures you have been hearing from us in India, whether it's MBG, OBG, industrial water, desalination, you will see this coming in one cluster, which will be called India and Southeast Asia cluster. Here we will bring in the top people who will lead, whether it's marketing, whether it's sales, whether it's technology, whether it's execution, HR focus. All that we can only do when we have capable people focused on it. So rather than having so many people in various verticals, we want to bring them under one, so that the senior people can focus on the top layer and the middle guys can create capacities at the lower level. And that is the whole basis of that. We had, in fact, appointed Deloitte HR Consulting to support the management in this exercise. This has been done for last 2 months. We have done this exercise, we've taken their guidance, they have done some studies within the company, outside the company, they have done a peer group matching, and finally they have come to a recommendation. They have said that what is important? Why do we need this? They said our strategy should be, our water business is very local business. We cannot sit in Austria or India and try to do a business in Bucharest or in Muscat in Oman. We have to be locally present, meeting the customer because the decision makers are local. So we have to have the local presence and global strategies. So that is one of the basis of going for realignment. We have to bring our focus more on customer. We have to be focused outside rather than focused inside and build a performance culture. It is all based on what you produce, what is your outcome, or what is your results, rather than based on your efforts. So that's another assumption. Strong functional organization competencies. This is what I said. We have to have the right people in the right places so that we have strong, competent people running the business and running the functions. Of course, our business is very competitive and we don't get from colleges a ready-made water engineers. So we have to build capacities. So all this training, HR becomes very important. Also, we had seen over the years, we had built some silos because each unit would try to do his business, they will not talk to each other. And we said we need to demolish the silos and bring in efficiency, bring in collaboration. This again is an assumption that collaboration is more required to be competitive in the market. Of course, the most important, you may be operations, you may be municipal, you may be industrial, but finally we are all one Wabag. So that feeling that we are globally as one Wabag and not whether I'm Romanian, I'm Austrian, I'm Indian, we should be as one Wabag. We do our engineering, our quality, our technology is globally one. And that was one of the bases of doing this realignment. During the study, they found that there is definitely a scope for improving the performance agility. We need to have a good balance between control and collaboration. Neither we need a more control, nor we need less collaboration. So I think there must be a good balance between them. It's also been seen that some of the decision making was being pushed upwards, and that we have to develop a culture and encourage entrepreneurship so that decision making is happening at each level as per levels of authority. Also, there has to be a good balance because what you decentralize and what you centralize, because lot more decentralization also bring in redundancies, whereas centralization reduces efficiencies. So has to be a balance between decentralization and centralization. Customer focus, I talked to you. We also saw that some of the people had very high span of control. That some of them had 10 to 15 people working. How it is possible? They cannot guide them, they cannot focus on it. So we also want to ensure to have a proper focus, span of control is also limited. So we are saying max 5 to 7 is what a very good person should have. Average should be 4 to 5. These were the basis on which the reorganization or realignment in the organization is being done. Just to conclude on the financial numbers, we have done almost about 3,000 crores compared to last year of about 3,350 crores. I think I'm very satisfied and proud of my boys that they could, in such a tough environment, especially when India has not been throwing out a lot of opportunities, they could book good orders with decent margins in this challenging environment. What helped us? It is the diverse geography where the company is present to go and book some orders, even if India is not going out opportunity. And that's how we minimize our risk by having a diverse presence. I think it fell slightly short of what we had told you. And the main reason is the euro depreciation. When we told you, euro was almost 82 or something in the start of the year, if you remember. And by the time we closed, it was close to 69, 70. So that small difference you see is mainly coming from euro differentiation. Now, if we look at revenues, here also we achieved 2,400 crores approximately. If you see again, have we achieved what we forecasted? Short answer is yes. If you take on each of the local currency, in India, the Indian rupee, in Europe, the euro, and Philippines, the US dollar, all that, or Filipino pesos, we have achieved all what we committed. But when you translate it to Indian rupee, there is a shortfall because euro had a big movement in the last year. Also, some of it was because of some delayed order in the second half compared to the first half. Some book and bill revenues came down, but that was a small portion, which of course we will catch up during this year and book those revenues. But based on orders, I think we have all. I think the company, as I said at the start, has been consistently creating shareholder value. In the last 1 year, we met in the same hall, and you've seen the company has outperformed the Sensex in a big way in the last 1 year. We gave a 1:1 bonus. We have continued to pay dividend as 20% of our earning. This we have done since the start of our IPO, and we are continuing till date. Yesterday in the board meeting, the board of directors have recommended this dividend, and I'm sure the shareholders in their AGM in July will approve it, and then we can distribute this dividend. You see, in the last 2 years, our guidance, what we committed, we met. There's a small shortfall you see in 2000 FY15 is the reasons I mentioned to you, mainly related to euro depreciation. And going forward, we would like to place our guidance of approximately 28 to 30 billion in revenues, order intake 35 to 37 billion in order intake. Thank you very much, and over to you all for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question.
Anybody from the hall also? The guys.
The first question is from the line of Sameer Deshpande from Fair Deal Investments. Please go ahead.
Hello.
Yeah.
Good afternoon, sir.
Good afternoon.
Thanks for the bonus issue of shares you have given this year.
Yeah.
And we needed that. Our equity is comparatively very lower compared to the size of the business we undertake. So that was a thing which was a welcome thing. Even our order book of 6,800 crores is also phenomenal, because if we consider our turnover of 2,400 crores, we are booked for almost 2.5 years. But I wanted to know that what is the time frame for execution of these orders?
See, generally the EPC orders are 2 years to 30 months, so about 2 to 2.5 years. But on average, the O&M orders are 3 to 5 years.
Acha. And out of this 6,800 crores, what is the EPC contra part and this O&M part?
Just, I think we have to check hold on for a moment.
Yes.
See, O&M out of this is approximately 1,700 crores,
Acha.
and about 5,000 crores is EPC, including the framework we are talking about. When we talk about 6,800 crores, it's including the 1,400 crores of framework.
Acha, what does it mean actually, this framework?
I think this is maybe our creation, and maybe we take a lot of pride in it. Again, it's part of our transparency. See, a lot of people, the moment they get a letter of an award, they announce to the market that they have got an order.
Right.
But these are not executable orders. Even after some time, it doesn't happen. We generally become very cautious unless for international orders, LCs are open or financial closures are obtained. We don't take it in the form of books. We park it under framework. It generally takes anywhere between 3 months to a year to come to framework.
And secondly, this you have given a guidance of some 2,800, 3,000 crores for the next year. This is 15, 16.
Yeah, for the revenues, yes.
So it was 24, and so we are expecting around 20% growth.
But that has been always our endeavor. Assuming the currencies are kind to us.
This time we had this euro problem, but do we hedge the receivables to protect ourselves or not? Okay. So actually the hit cannot be quantified, it will not be much. But actually, as you mentioned, the profits, the impact on profits, was it substantial? Not much.
See, it's only the European profits when you convert to Indian rupees, you will see a lower number because of the euro depreciation. But in real terms, we are not moving the money.
Right.
Not the money from Austria is moving. It's just we are obliged to put everything in Indian rupee because we are listed in India.
Yeah.
It's only translation. There is
Yes.
no cash loss because of any currency. I hope you understand.
Yes, yes, yes. That is a very important thing.
Yeah. Because we are not moving money from one country to another. The Europe will remain where they are.
Actually. And now out of this, actually, when you see our results, the segment revenues, the rest of the world business is contributing about 27.5% of the as a segment margin, if you see. And in India, we are making some 17 odd percent. So, so in the order book, 6,800 crores, what is the domestic portion of that? So the Indian order book is almost equal to the outside order.
Sorry to interrupt, Mr. Deshpande.
Yeah.
May we request you to come to the question queue for a follow-up question?
Just a minute after this question.
Okay.
Sir, this 6,800 crore, hello?
Yeah, please go ahead.
It is almost equally balanced, you can say.
Yeah.
And just last question I had was regarding debtors. The debtors are around 7 months. Our country debtor, if you take it around, there are some 1,480 crores, which constitutes almost, if you take our turnover of 2,400, it is around 7.5 months.
A big number, but when we do 45% of the volume, the balance sheet is so high receivable. We generally measure ourselves in terms of working capital. Now, as a working capital at a consolidated basis, excluding the cash which is sitting there in the balance sheet, we have a net cash of 320 crores after deducting the borrowings.
Right.
We take that for 68 days. We were at 49 days in 31st March 2014. We are now at 68 days. And for the benefit of people who are dealing with the first time, I'm telling that anything between 50 to 80 days is something has been the range over the past so many years. The movement will largely depend upon which part of the bigger or the smaller project that we are hearing completion, because up to 70-80% will go very fast. And thereafter it will be a lot of work, and finally the 10-20% retention will come for a longer time. This is the kind of business that we are in. If more projects are towards that end, you will find that at that point of time the working capital tends to a little bit more. And then when many things are completed, you would find that it's back to 50 days or so. So anything between 50 to 80 days, if it is there, as a CFO, I will not be worried so much. If it crosses this limit, definitely I will be worrying. But I must mention, which Mr. Mittal has also been mentioning the previous quarters, that the market situation in terms of liquidity for the contractors has not been so very good. You know, we take EPC and then we take turnkey responsibility. And when the partners in terms of subcontracting, they are not able to have that kind of liquidity position, we do definitely take care of them in terms of funding them to in the interest of the work to be completed faster. So this is how we have been using the working capital efficiently and effectively in order that the progress is achieved We bring larger order intake as a measure of growth, but at the same time we are expediting the execution part, because if for the liquidity stake, if you are going to hold the construction or the progress, then we can't be growing. So this is how we have been doing. So it is within the limit what I have been explaining so far.
Because the interest cost, we are paying 31 crores this year compared to the 12 crores last year. That is, I think, being reflected there also to some extent.
Okay, interest, I'll tell you, it's a movement of 19 crores and odd. You would find there is largely on account of two. One, we had new contracts and we had to give a performance guarantee to every contract at the start, and we have to service that. That will be almost about 50% of the movement. This has happened across so many countries, including India, Philippines, Austrian projects, all the projects. There is a boot project which we have in Namibia, in Ujams is the name of the project. This project also has interest cost which is on account of investment that we are making. It's a long-term investment that we are making. It's about 14 million euro project in which Wabag is holding the majority stake. So it's a subsidiaries where we are taking that into the balance sheet. That's a significant part in terms of the interest cost part of it, and a smaller portion will be for the Istanbul project which Mr. Mittal was explaining. That's a new project. It's a very significant, larger project of operation and maintenance, about 1,000 people what we have deployed there. It's a smaller entity. We have arranged for the funds locally and they are borrowed, so some interest cost is also on account of that, because we don't take advance for operation maintenance, but we get month on month billing and we get the liquidity in. So this is how the interest cost has been spread in terms of the moment.
I think you just have to recognize this. It's not only an interest cost, it's also a financing charge. And that's what, it's the cost of bank guarantees and letter of credit. The more the business we do, obviously we have to give performance bonds, we have to give advance bonds. That also has a cost. So that cost, because last few years our order intake has been decent, and as a result of that, there is definitely going to be a higher finance charges, plus the interest cost which Varadarajan mentioned. Just to let you know, just now in the presentation I mentioned that we want to remain asset light. And obviously the question is, then why did you invest in this 14 million boot project in Namibia? I think generally we don't invest, and even if we invest, we take a very small minority shareholding to get a portion of EPC and O&M. This project we invested for two reasons. One, this is an existing client in Namibia where we have been associated for the last 13, 14 years, where we are taking a dirty water and converting them into a drinking water directly in the capital city of Namibia called Windhoek. And we have been operating that plant for 12 years. Client has been excellent paymaster and there has been a strong relationship. Here was the opportunity to demonstrate again our technology superiority, and that is the reason we decided to invest, to show that we are a technology leader. This is a very strong wastewater. This is a cocktail of slaughterhouse, brewery, tannery, mixed water, and they really wanted a technology which can treat this water. And Wabag did a pilot trial for 1 year to show that we have the technology to do it, and then we went into to invest. So this is the investment from a very strategic point of view.
Right.
Just one more point, because of a lot
Sorry to interrupt, Mr. Deshpande.
Yes.
May we request you to return to the question
Okay.
for a follow-up question?
Okay.
Just to add to the information what we gave, since we have a lot of bank charges, I just want to keep you updated that during the year the company upgraded its credit rating from A to AA, and because of this credit rating we also negotiated well with the banks, and we enjoy a very good pricing from the banks. But still the volume goes up, and that's how we spend more. Of course, when we have multiple guarantees, because we are doing a project in a place where we don't have a subsidiary or local presence, we give guarantees where it should be fronted by a local bank and there the cost will add. But nevertheless, with our bankers, consortium banks, we have done a very good pricing because of this rating.
Any questions from the floor? Please. Go ahead.
Okay, my name is Chandru Badrinaran. I've been a long-term investor in Wabag. My question is, in most of these EPC projects, you have a payment risk. How do you cover the payment risk in these EPC projects? My second question is, what are the major risks you see to the earnings guidance for the next year? And my third question.
I think wait.
Yeah.
Wait for the third question. We'll answer two, otherwise we'll forget the first one. Okay. I think the first question is about your payment risk. I think your company you have seen in last so many years is very conservative. If you analyze some of our projects, especially the large ones, most of them are multilaterally funded or there is some sort of assistance from the central government. Very few of these projects you will find which is state or local municipal funded. When we have a multilateral funding, the funding is not dispersed to the state authority or to the municipal authority unless they can prove the disbursement to the contractor, which is we. And hence, most of our projects have gone well, where our payments have never been stuck for any big projects what we have. Some of these projects, even from center, we have seen there has been some delay because of the state and central relationship, but it has never been that we had to write off because the state or center could not pay. So from that point of view, I think if you see our write-off, it will be 0.5% or less where we have, so we have never had a major issue of write-off of the projects. Number two, from your point of view, what is the risk? I think we are in a business which we are prone to a lot of risk. And obviously the biggest risk is the geopolitical risk for us, which we were talking about in 2010, things like Arab Spring. If things like that happen, and especially this year, we are depending on large international orders, this can slow down. And then we will have to move to another country like we did in Turkey and Philippines. But to start any new business, it takes 2-3 years. So that can be one of the risks. But today, because we have such a diverse geography, that will not be a major risk because yes, 10-20% can move here and there, but we are not putting our eggs in one basket. We have multi-geography focus.
My third question is regarding that most of your orders are coming from the multilaterals as well as from governments. So what kind of process do you have to engage with the multilaterals and the governments to lead the thoughts on the opportunities?
Yeah, I think this is a market or business development effort. We have a separate dedicated team, whether it is in international geographies or in India geography. And their job is all about lobbying. Lobbying with the government, lobbying with the decision maker, lobbying with the consultants and the technology suppliers and technology selection agencies. And our always aim is to get our technologies introduced to them and finally selected. And that's how we ensure that we put barriers to our competition by even influencing the pre-qualification. And if we are able to do that, we have a good chance of winning. And that's how we do. Generally for multilateral agencies, they go on your track record. They don't get influenced by all this because they have a consultant appointed by them who have to make this decision. Thank you. Go ahead. Yeah, gentlemen.
Hi, Nikunj Doshi from Bay Capital. Just wanted to understand, when do you see Namami Gange first order being coming out, and what kind of orders do you expect? It's going to be EPC, or is it going to be BOT, more of BOTs, or is it, and in EPC it is going to be whether civil separate, mechanical separate, or it's going to be a consolidated one order? What kind of orders you are envisaging from there?
I think it's too early to predict what it is. But at the moment, whatever we have heard, whatever brainstorming we have been having with the various agencies, and we have been part of some of the think tanks, what the government is thinking about, I think it's going to be a mix of both PPP as well as DBO, design, build and operate. I think the DBO ones directly fit into our strategy because that will not need investments, and we not only build but we operate the plants for a long term. Earlier it used to be 5 to 10 years, now the government is talking about operation for 15 to 20 years. So this is a music to our ears, that you will see all the future contracts will come with 15 to 20 years of operation contracts. And that's something we like because it gives us a long-term visibility and also helps us in maintaining a relationship with the customer. I think there are also a discussion where some pilot projects will come on a PPP model, but it has to be seen who is going to pay the annuity in the PPP model. Is it the center? And if it is the center, what is the mechanism? Because water is not a responsibility of a center, it's a responsibility of the state. So this complexity is always there. How they are going to guarantee the payments to the private investor who is going to invest in the project for next 15, 20, 25 years. So that's the challenge which government will have to handle.
So this is Devang from INFS. Follow up to that.
Get up and put your hand. Yeah.
So follow up to that. Hello. In the last 1 year, what kind of preparation has been going on for this Clean Ganga project? On preparation on DPR, preparation, tenders, identifying sites, land acquisition if required any. If you can throw some light on that. You've had probably more eyes on the ground and you've been talking to the government. So
I think if you say at the high level, thinking, policy making, how to fund, what are the challenges, you can see the 5 states which is on Namami Gange are all opposition states, whether you start from UP, Uttarakhand, you go to Bihar, you go to Jharkhand and West Bengal. So I think this is something government is trying to see what is that model they are going to bring in, which will motivate the states to cooperate with center and manage this project. I think that is the key which the thinking is going on. What is that model which will bring enough funding and will ensure this funding will be used for cleaning the Gange? Because in past also, many times this Ganga action plan has come in, thousands of crores have been spent, but Ganga remains to be clean. So this time I think they've spent a lot of time, they've spoken to all the stakeholders and trying to come up with something which will ensure that they have some return to the investment they do. And I think that's the reason it's taken longer. As I said, they've just announced a 20,000 crore allocation for this. This is the time now the consultants, RFPs and all that will start getting ready. So that's where we will assume in next 3 to 6 months we'll see some projects getting announced.
So secondly, a question on the international EPC order book. It seems to have slipped a bit. How much of the currency change is reflected in this, and if there is...
It's about 70%. From 82 last time when we closed, this time it was 69 or 70. So it's about 70% dip in the order book in terms of Indian rupee. But as far as the local currency or euro is concerned, it remains same as I said, that they have all met their targets.
So how much of the order book is euro denominated? So the closing order book is adjusted for the currency changes.
On the 31st of March. When we say closing order book, it's as of 31st of March 2015.
Right. And we see the O&M order book going up. So Is there any change in strategy or geography focus or
No, the
market?
strategy remains same. We welcome more O&M orders. So the O&M order book going up is a healthy sign. That's in line with our strategy. Okay,
Thank you.
next. Yeah, somebody gets the mic.
Hi, this is Tanuj from Ambit. Sir, despite 250 million provisions, hello? Yeah. So despite 250 million provisions for Al-Qudra project, your subsidiaries EBITDA margins have increased. I believe that would be most likely due to performance of Philippines and Turkey. So can you please provide approximate revenue and EBITDA margin numbers for Philippines and Turkey geography?
I think can we take it offline, because if we go down to each subsidiary, we'll take it offline, but we can say it's not only Philippines, it's not only Turkey, it's been Nepal, order which we are executing for JICA, they've all been very profitable orders. So we can give you a breakup separately.
Can you give a rough guidance as to what are your EBITDA margins in the emerging markets? Can we see this uptrend to be continued, say in 16, 17, where your subsidiary margins will improve, say by 100 basis points?
I think a fair idea you can get from the segmental reporting, as the gentleman said, that the rest of the world has grown up about 27%, India has grown out about 17%. This perception that internationally we don't make money is taken from rest of the world. You can see, yes, it does make money going international where our profitability is better than Indian business.
The second question is, excluding the Al-Gubra project just being delayed, are there any other slow moving in your order book?
Yes, I think when we are into such a large volume of projects, this obviously will be, some of these projects will be slow moving.
So,
And it's not necessary that it's all contractors' fault. It's also possible that clients and consultants have also not been able to give us the inputs to do that. If it is their fault, we get extension of time. Most of our projects in India which are delayed, it's not only our fault, it's also the client and consultants. Then they give us extension of time.
can you provide the quantum of projects delayed or slow moving projects in India and overseas?
How do you want it? Because we have at the moment about 100 projects running. We can't count and tell you how many are delayed. If you want, we can give you a percentage later on to say that how many of these projects are delayed in India and abroad and who is responsible for it. And the moment we feel that there is any risk of our fault, as we have done in Al-Gubra, we will immediately provide for it. And that's again a conservative and prudent, I think, business practice we follow. Even if client is not like Gubra, they are not deducting any money. They are not saying that we will, in fact, tomorrow morning I'm flying there for a meeting with the client stock management. They are requesting us, the summer is coming in Middle East, they need water, and they want us to deliver water, and they want to give us some special tariffs to deliver water. So we are also going there and see how we can deliver water to meet their requirement by end of this next month. Though we are delayed, client is inviting us, what do you want help to deliver it early? But still, we think it's a prudent practice for such a large project, we have made a provision. So that's a conservative policy we take in making provision wherever we see a iota of risk.
Can we assume that there is a high probability that these provisions for Al-Gubra would be reversed in FY16?
If we do, we will be smiling next week.
The next question is, can you please give us the scope of work, specifically the scope of water management work in your Andhra Pradesh Genco project? In that project, what is the scope of civil work? And yeah, that's it. take further?
I think it is a project which I was talking to some of you over a cup of tea. Wabag has been regularly doing water for power plants. As I said in my presentation, we do water for municipal and we do water for industries. Which are the large mega infrastructure industries? Is oil and gas, which is refinery and petrochemical. We are very big, like IOCLs, ONGCs, Reliances, and likes of them. Steel mills, whether SAIL, Wabag steel plants, we are very big. And all the power plants, whether State Electricity Board, NTPCs of the world, DHLs of the world, we do a lot of water management. Sometimes we do a part of water management, sometimes we do a total water management, which is boiler feed water, cooling tower water, waste water, ash recovery water. That was our scope, which was almost 250 crores out of that. But because one of our partners could not execute a certain portion, which is the CHP and ash handling system, this is where the client wanted us to come in and execute that. And you wanted how much is civil works? Almost 1/3 of that is civil works in that. So that is what we have subcontracted. And that's also a chance again to reinforce and demonstrate that we are a large company with a very good proven track record in executing large and complex projects. This is a project, this is not 100% water, but we are demonstrating that we can execute projects which have a huge requirement of project management. The whole complex project management, site management is done by us, and we are executing. One of the projects will finish in this calendar year, and one of the projects will finish in next calendar year. So this also is again an opportunity to demonstrate that we can execute large complex projects. Second, I just want to clear the minds if people think, are we going to diversify into balance of plant? Thing is no. We will remain in the balance of plant, yes, but we will stick to our water management.
Sir,
Can you give it to somebody and come back again?
Sure.
Hi, this is Balaji Subramanian from IIF. Just a follow-up to his question. So, how is the margin and working capital profile on this particular project, the APGenco project? And the second one is, it's a little bit of a housekeeping question. What should one take as the depreciation for the consolidated going forward? Thank you.
First one I will answer, and the depreciation I'll pass it to Mr. Wabag. See, I think today we are not talking about margin for this project. Because whatever project we have, the water management, which I said 250 crores, we will have our normal margins of whatever 20% operating margins, we will carry on with that. The portion which we are executing, today we are being very conservative. In this financial year, we have not taken any margin into this. But going forward, when we close the projects next year, obviously, if the margins are there, first it's our margins, and any leftover, then we will share it with the partners. We have a clear agreement. If we are executing the project on their behalf, how much margins is us, because of the management is by us, and how much above that is by them, or for them. So this is the way we are doing, and I think depreciation is over the road.
See, on depreciation in terms of what is the addition in terms of capex, etc., I must say that we don't have much of a capex plan for this year. What you see over here is the new building, corporate office that we had constructed and now occupied also in this, and we are more or less done on that. So we don't need much of capex, as you know. We need some computers and some office equipment and things like that, and that will not be much. If you take about in India or everywhere, you will find about 5-6 crores per annum or something. That's a normal addition which we do.
Any questions on the conference?
No, sir, no more questions on the call.
Okay, then we'll put it to the...
Hello. Yeah, this is Charanjit from Access Capital. So first of all, if you can help us understand on this Habra West Bengal project, what was the differential between L1 and L2 and who were the L2 and L3 players in this specific project?
Yeah, I don't know about L3, but L2 was LNG. And I think the differential, I don't remember exactly, was less than 10%.
Mm-hmm. And what are the specific timelines of completion of this AP Genco project and Habra project?
Habra project is about 24 months and I think 6 months for commissioning or something. So I think we have to substantially complete in 24 months and hand over in 30 months. Mm-hmm. And in AP Genco, I said there are two portions, there are two plants. One is KTPP, Kakatke, another is RTPP, Rayalaseema. Because of the split of the state, one is gone to Telangana, another is gone to Andhra. The Telangana will complete this calendar year and Andhra one will complete in next calendar year.
And sir, do you foresee any kind of issues in terms of clearances or any other factors which could actually delay the execution of the Telangana part of the project?
Not at all. This project is in next few days. We should go for a boiler lighter, or not we. BHL is going for a boiler lighter. And after that, I think generally it takes about few months, maybe 3 months, to go for a synchronization. And then it's COD. So that's the reason we are very confident this calendar year Telangana will have.
And on the order inflow guidance, like you have highlighted very clearly the geographies that we are focusing on. Is there a geographical breakup or your thought process in your mind where we are going to get this order inflow from in going forward in FY16? If you can help us quantitatively in terms of the numbers, which geographies can contribute, what percentage?
I think it's again a very detailed question, which you should take it offline, because I don't think we discussed this 20 geographies we are in to say that what comes from where. So I think we should take this question offline.
But at least the 80%, maybe there are some significant geographies which you are targeting rather than just going more into detail, but which will be the most significant ones?
I think the 80% when you say is almost everything. I can say that our geographies are partly coming still from Southeast Asia, Middle East, then again India will definitely contribute something. This itself will be about 60-65% of the volume.
Okay, so in the Indian market, the overall pipeline of the projects, has there been a significant increase? How has been the growth?
No, in India we have not seen a huge increase in the pipeline, which we expect to see in the next 2 quarters. As I said, it's just now the major money is getting allocated. So by the time they load the consultants and RFPs and all that, we'll see maybe next 2 quarters we'll see the pipeline growing.
And just the last thing,
I think
what could be the size of this opportunity?
You have to have some discipline. There's so many people. 1, 2, 3, 4. I think you wait next chance.
Hello? Hello? Hello?
Please.
Hello? You said Manila water, that is in Philippines.
Yes.
There you have shown 8 plants. One is 100, 160, 20, 10, 6 and 6. Total comes to 300 MLD. Why there are 8 plants? And because you said 191 is your highest capacity, whether that may not be your problem. Why you put 8 plants there in Manila?
I think you must also see, you're comparing a desalination which we put in Oman, which is 181 or 91, compared to the sewage treatment plants in Manila, where you say there are 8 plants. It's a decision which a customer has to make, whether you go for small decentralized plants or you go for one large centralized plants. So there is also Ilogin 100 MLD plant, okay, in that. There's also a small 6 MLD plant. So they do their economic calculation, that is it good to collect and pump to one central plant, or is good to treat it locally and decentralized plants. So I think we are not part of that decision. This is done in their master planning. We are only a contractor, execute the projects as designed by the consultant and the clients.
But whether 6 MLD is a economical plant?
It is not, but I think they will have the good reasons why they cannot transfer the 6 MLD to another plant. We are not aware of it to comment that it's the right decision or wrong decision, because they must have done their study, and these are large water corporates, privatized, so I'm sure they will not like to waste their money. They are focused both on capex and opex.
And what is the total MLD desalination plants in India? Because I have seen Jamnagar. Whether you have done that or not, I don't know.
No, we have not done that. We have done a pre-treatment for Jamnagar for Reliance, where the water comes in, we pre-treat it and then send it to desal plant. They have used a different technology, thermal desalination, and this is done by another company, one of our competitors.
What is total desalination plants in India? MLD I want to know.
Maybe I have to do some research and do some arithmetic calculate.
Because you said, somebody said geography, where you will get orders. So we have got sufficient coastal area.
Huge coastal area, especially Gujarat, you are talking about, Tamil Nadu, Andhra, these are long coastlines. So these are our opportunities for future.
Okay sir, thank you.
Any more, some couple of questions? I think also this is an opportunity to also say a few words of my colleague who is sitting on my left. Mr. Bernard Guru has been in water business for a very long time, and I know him personally for last 25 years when I used to work in UK. Bernard used to work in Sulzer in Switzerland. In that time, I used to work for John Brown Engineering in UK. We went to Sulzer to take their technology. Swiss technologies are the best globally, and John Brown from UK went and we licensed some technologies to do business in UK. That was in 90s, in 90 when I went and we signed an agreement. Since then I know him. Then Sulzer Water was acquired by Viatech around 96. We met again. Wabag was acquired and Sulzer was acquired. We met again. And then I think he led even the Austrian business for a couple of years before he decided that he wants to move to France. And now, as we have done realignment, we have called him back and said, you should lead our European initiative. So Bernard is going to head the European cluster, and some of you have met my colleague Eric Gottlieb, who used to lead our European business. He is going to move to lead the Middle East and Africa business. So I just wanted to say a few words about this reorganization and how Bernard is going to occupy a very important position for us in Europe. Any question?
Hi sir, this is Amar Kedia from Nomura. We have been hearing about a few orders in Mumbai, for example, the sewage treatment plants, the large ones. There are some orders in Gujarat about desalination opportunities over there, and then the Chennai desalination project 2. There's also a project in Vizag. We've been hearing about these projects for quite some time. Any update that you might have on these projects, and also if you could also help us with your own estimate of ballpark opportunity for some of these projects?
Yeah, I think as you have been hearing, we also have been hearing a lot of interest, and we hope we also see some work coming out. I think Mumbai has been huge disappointment, not only for we as contractors, but for all Mumbaians. This has been a huge disappointment because a lot of waste flows into the sea. It's polluting your beaches badly. Today, none of the beaches in Mumbai people can go and relax. And I think this is a big disappointment for not getting the things done. Let's hope the government change. New government will focus better on the environment, and they will implement things which are ready to be implemented. It's not that it's going to take time. Everything is ready. They just have to give the thumbs up and the things move. I hope sincerely and pray that sense will prevail, and large project is a mega project. Mumbai is not small. A lot of sewage you generate, and this has to be treated. And I hope at least we see out of this half a dozen projects, half of them coming in this fiscal year, is my sincere hope. Gujarat has followed a different model compared to Chennai. Chennai has gone for a technology model which is based on desalination and water reuse. Gujarat has followed a piping model where they have brought Narmada, laying kilometers of pipe across Gujarat and to supply water. I don't know which model is better, but I think we like, especially companies like us, we like technology models, because technology companies like technology models. Maybe our big brothers, the construction companies, like the piping model, but we pray again that people go for more technology solutions rather than just laying a lot of pipes, pumping and all that. So we see in future if Gujarat changes their stand and go for desalination and water reuse.
So, sir, just to follow up on the Mumbai projects, where exactly is this stuck? I mean, in terms of the STP projects in Mumbai, because what I understand is that the pre-qualification had already been done for at least one project, if not more. So,
three projects.
Yeah, for three. Okay, so for all three of them, is it?
Yeah. From location point of view, I can quickly tell you, it's Kolaba, it's Ghatkopar, it's Mulund, done. Pre-qualification, Mulund is Bhandup. Worli, Bandra, Malad, Versova, yet to be done. These are 7 large mega projects in the country. These plants will be bigger than any other plants in the country. So this is a mega opportunity. And we have the last question before we close. You have anything? Or shall we close? Time for IT. Yeah? I think then no more questions. Somebody want to say a few words and say what you expect from us? Anything before we close? Yeah, here it is. This is the last comment and then we'll close.
Do you also have a plan to create your own brand of water, or since you are water specialist, like a brand like Avian going forward?
Maybe.
Okay.
Not at the moment. Okay. Maybe sometime in future we'll do that, because this business is very small. It is nothing to do with treatment. It's more to do with the consumer. It's all that business.
Correct.
So really it's not in our thing. And to supply plants for this bottling is very small. It doesn't fit into our...
Yeah, but the water quality, you are specialist in...
Our water treatment plants produce better quality than this water.
Oh, really?
It does.
So that makes sense actually.
Yeah. Thank you very much. And I think that this high tea, please join us for high tea before you do. And thank you again for attending this. And we appreciate your presence.
Sure.
We can also close the conference, madam.
Yes. Ladies and gentlemen, on behalf of VA Wabag Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.